Welcome to this deep dive into Sands China. You sent us their 2024 annual report, a really comprehensive document, and we're going to try and extract the key insights for you. Think of this as your shortcut to understanding their business, from their massive resorts and how they make money to their plans for growth and how they aim to deliver value to shareholders.
Exactly. We've got a wealth of information here, the chairman's overview, a detailed look at their business, management's analysis, and, well, the full financial statements. Our goal is to synthesize all of this so you come away with a clear understanding of Sands China's operations and future prospects.
Okay, so let's start with how Sands China actually operates. It's more than just casinos, right? These are integrated resorts. What does that really mean for their business model?
It's a crucial distinction. Their core model revolves around these large-scale properties that combine gaming with a whole range of non-gaming amenities. Hotels, retail malls, restaurants, entertainment venues, and facilities for meetings, incentives, conferences, and exhibitions. MIC.
Wait, am I?
This diversification is key to attracting a broader range of visitors, and it contributes to Macau's overall economic development. It also creates multiple revenue streams, making them, well, less reliant solely on gaming.
And they have a pretty impressive collection of these integrated resorts, each with its own theme. The Venetian Macau, for example, seems like a flagship property.
It is, yeah. The Venetian Macau remains a cornerstone. In 2024, it drew in like 13.5 million visitors, highlighting its enduring appeal. What makes it stand out is its scale and the iconic Venetian theme, creating a really unique destination. Then you have the Londoner Macau, now their largest resort, themed around London landmarks. What's particularly interesting here is the ongoing U.S. $1.2 billion Phase 2 renovation.
Wow, 1.2 billion.
Yeah, and that includes a significant upgrade with the rebranding of the Sheraton Grand Macau to the Londoner Grand under Marriott's luxury collection.
That Londoner renovation seems like a significant investment for them. What's the thinking behind that scale of upgrade?
It's about elevating the guest experience, and attracting a higher spending clientele. By partnering with a luxury brand like Marriott's Luxury Collection, they're signaling a move towards more premium offerings.
Makes sense.
The staggered opening of the renovated rooms, over 300 by the end of 2024 and another 700 in early 2025, allowed them to sort of gradually introduce the upgraded product to the market. The remaining facilities coming online throughout this year will, further enhance its appeal.
Okay. Beyond those two, they also have the Parisian with its Eiffel Tower, the Plaza Macau with its high-end retail, and the original Sands Macau. It's quite a diverse portfolio. So how are they strategically trying to grow their business across these properties?
Several key initiatives stand out. Their multi-year partnership with the NBA is a really interesting move, I think.
The NBA? Really?
Yeah. Bringing preseason games to the Venetian Arena in October 2025, alongside fan events and an NBA flagship store at the Londoner, is a clear strategy to tap into a different demographic: sports fans, families, broadening their appeal beyond just gaming. This isn't just about filling seats. It's a calculated move to capture the family tourism market and build brand affinity beyond gaming. That's a key differentiator as Macau seeks a broader appeal.
That makes sense, reaching a wider audience. What else are they doing? Anything else stand out?
Well, they also brought back the Cotai Strip Countdown, which is a large-scale New Year's Eve fireworks display across their main properties. That attracted over 30,000 people.
Wow.
These kinds of events create buzz and, well, drive visitation. Additionally, their annual Sands Lifestyle Roadshow series in mainland China, with Beijing mentioned as an example, is crucial for directly marketing their offerings to potential tourists.
So it's a blend of big attention-grabbing events and consistent targeted marketing. What about their approach to the core gaming business itself?
Strategically, they're focusing on the high-margin mass-market gaming segment. This involves attracting a larger number of individual players as opposed to relying heavily on VIPs. However, they are still catering to the premium and VIP segments as well. Their diverse property portfolio lets them segment the market effectively, really. The report indicates they see long-term growth in the mass market, driven by economic expansion and a growing middle class in the region.
Focusing on the mass market seems like a more stable long-term strategy, doesn't it? Does their sheer size give them any operational advantages?
Absolutely. They emphasize leveraging their scale to achieve cost efficiencies. This means they anticipate lower unit costs in areas like utilities, staffing, and even centralized functions like transportation, marketing, and procurement.
Oh, yeah.
Their scale allows them to negotiate supplier contracts at significantly lower rates than smaller operators, which translates directly to a more resilient bottom line. That's especially crucial in, fluctuating economic climates. Consolidating administrative tasks across their properties also enhances efficiency.
And their retail malls seem like an integral part of this whole ecosystem as well.
They really are.
Yeah.
The malls, shops at Venetian, shops at Londoner, shops at Parisian, and shops at Four Seasons provide a diverse range of tenants, contributing significantly to their non-gaming revenue.
Right.
As of the end of 2024, occupancy rates were generally strong, particularly at shops at Venetian, like 92.7%, and shops at Four Seasons at 96.5%.
Pretty high.
Yeah. These malls generate revenue through a combination of base minimum rents and overage rents, which are tied to the tenant's sales performance, plus reimbursements for common area maintenance.
Overage rent. How does that work again?
Right. So base rent is the fixed amount tenants pay. Overage rent is an additional percentage they pay based on their sales exceeding a certain threshold.
Got it. So it varies with how well the shops are doing.
Exactly.
It's a whole self-contained world they've built there. They even handle their own transportation, right?
Mm-hmm.
Ferries and buses.
Precisely. Cotai Waterjet provides ferry services connecting Hong Kong and Macau, which is crucial for bringing in visitors. The Cotai shuttle buses offer free transport between their properties, the ferry terminals, the airport, and border crossings, making it easy for guests to get around. And the shared access to corporate airplanes through their agreement with Las Vegas Sands, LVS, allows them to efficiently cater to their VIP clients. Plus, Cotai Ticketing further streamlines operations by managing tickets for events and attractions across their resorts.
It sounds impressive. But with such a large and complex operation, there must be some significant challenges and risks they face.
You're absolutely right. The report highlights several key risk factors. A major one is their sensitivity to customer willingness to travel. Economic downturns, natural disasters, disease outbreaks, political instability, all can significantly impact visitor numbers. We've certainly seen how unpredictable global events can be.
Definitely, yeah, that's a big one. What else is on their risk radar?
Well, intense competition in Macau is a constant factor, both from existing operators and potentially new ones. The ongoing construction and development projects, like the Londoner Phase 2, also carry inherent risks of delays or cost overruns.
Right, construction always has those risks.
And the regulatory environment in Macau is another key consideration. Their concession agreement with the government, which started in 2023 and lasts for 10 years, requires ongoing compliance and government approvals for certain actions, including raising capital. There's also the possibility of the government modifying regulations or imposing new requirements.
And financially, you mentioned earlier, they have a significant amount of debt.
Yes, that's a big one. At the end of 2024, they had US $6.98 billion in senior notes and a US $1.06 billion term loan from LVS. Servicing this debt is a substantial financial obligation.
That's a lot of debt service.
It is. However, they did secure a new US $4.18 billion credit facility in 2024, which provides them with considerable borrowing capacity. They also acknowledge the risk of not being able to collect on gaming receivables, as these debts aren't always legally enforceable in all jurisdictions.
Collecting gambling debts.
Yeah. And finally, like any large organization, they face ongoing risks related to technology and cybersecurity. That's just part of the landscape now.
Okay, let's shift gears slightly and move on to their financial performance in 2024. Can you give us a breakdown of how their key segments performed, starting with the casinos?
Absolutely. Starting with casino revenue, the Venetian Macau generated US $2.282 billion. That's a 6.1% increase compared to 2023.
Okay, decent growth.
Yeah, and it was driven by a rise in mass market wagering. That's the non-rolling chip drop, which was up 6.8%. Meanwhile, VIP wagering, or rolling chip volume, actually decreased by 18.6%.
Interesting divergence there.
It is, and their slot machine business also saw significant growth with a 17.4% increase in handle. This really highlights the shift towards the mass market at their flagship property.
That trend seems consistent across their properties. Or was it different elsewhere?
To varying degrees, yes. The Londoner Macau saw a strong 14.0% increase in total casino revenue, reaching US $1.462 billion, with growth in both mass and VIP segments. The Parisian Macau reported US $740 million in casino revenue, a 13.0% increase. But as we noted earlier, it saw a significant decrease in VIP volume as they relocated much of that business. Their mass market and slot revenues, however, showed strong growth there.
So VIPs moved, but mass market picked up the slack.
Pretty much. And the Plaza Macau also had a good year with a 23.8% increase in casino revenue to US $572 million, showing growth in both VIP and mass segments.
Okay, so overall, a positive trend in casino revenue across the board, even with some shifts between segments. What about their hotel business?
Right, hotels. For the group as a whole, room revenues reached US $774 million, which is a modest 1.7% increase year over year.
Only 1.7%. That seems low compared to the casino growth.
Well, what's interesting is the drivers behind this. While the Venetian saw a nearly 10% increase in room revenue driven by higher occupancy, the Londoner, despite having fewer rooms available due to renovations,
The renovations again?
exactly, they saw a significant jump in its average daily rate, ADR, and occupancy. This led to a substantial increase in revenue per available room, RevPAR. That's a key indicator of hotel performance.
So they charged more and kept the rooms full, despite fewer being available.
Precisely. It tells us they were able to command higher prices for their upgraded rooms and keep them filled. The Parisian and Plaza also saw positive growth in room revenues and occupancy.
Okay, so the Londoner renovations seem to be paying off in terms of pricing power, even if overall group growth was modest. Now, their mall revenues saw a slight dip. What's the story there?
Yeah, total mall revenues for 2024 were US $493 million, down by 3.9%. The company attributes this primarily to a decrease in that overage rent we talked about.
Right, the percentage of tenant sales.
Exactly. Remember, overage rent is the percentage of a tenant's sales above a certain level. This decrease was partially offset by an increase in the base rent that tenants pay.
So fixed rent up, variable rent down.
Correct. Looking closer, we see decreases in tenant sales per square foot across most of their malls. While occupancy remained generally high, particularly at shops at Four Seasons, the lower sales likely resulted in less overage rent being collected.
Interesting. So maybe shoppers were spending a bit less.
It suggests that, yeah, while the retail spaces are occupied, the tenants may be experiencing softer sales, which could be due to various economic factors or maybe changing consumer behavior in Macau. It's something to watch.
That's an important point to note. Okay, finally, let's talk about shareholder value. How are they planning to create value for their shareholders? The report mentioned a dividend.
Yes, the board has recommended a final dividend of HK $0.25 per share for 2024. If approved by shareholders, this will result in a total distribution of approximately HK $2.02 billion, which is about US $260 million.
Okay, it's a direct return.
It is, and it's notable that this dividend is proposed to be paid out of the company's share premium account.
Share premium account. What does that signify?
Well, paying the dividend from the share premium account often indicates that a company has accumulated capital beyond the par value of its shares and is choosing to distribute some of that to shareholders. It might happen particularly if current retained earnings are insufficient or if they want to preserve retained earnings for other purposes.
Interesting distinction. What about share buybacks? Are they using those as a tool to return value?
No, not in 2024. The report explicitly states that Sands China did not purchase, sell, or redeem any of its own shares in 2024 and held no treasury shares at the end of the year.
Okay, so no buybacks last year.
Right. So in 2024, their primary direct mechanism for returning capital to shareholders is through this proposed dividend. However, you could argue their ongoing investments in the Cotai Strip, particularly the upgrades to the Londoner and their strategic focus on the higher margin mass market. Well, those are all aimed at driving future revenue and cash flow growth.
Right, which ultimately benefits shareholders in the long run.
Exactly. Through potential for increased profitability and future dividends down the line.
So looking at the bigger picture then, how do you assess Sands China's business moving forward? What's the general outlook?
The outlook appears pretty positive, I'd say. It's driven by the ongoing recovery in Macau's travel and tourism sector, and importantly, Sands China's significant investments and, frankly, unmatched scale in the market.
Their size is a real advantage.
It really is. Their strategic focus on the mass market, coupled with the upgraded offerings at the Londoner and their diverse range of non-gaming amenities, positions them well to capitalize on this growth. Their commitment to contributing to Macau's diversification and supporting local businesses also aligns nicely with the government's objectives, which is always important there.
And they mentioned ESG too.
Yes, they did. Their attention to ESG, environmental, social, and governance factors, as indicated by their 2025 targets and 2024 performance in areas like waste diversion and volunteer hours, as well as their sustainability rankings. It suggests a commitment to long-term responsible growth. And that's increasingly important to investors these days.
So it sounds like they're basically betting on the continued economic growth in Asia
Yeah.
and the resurgence of travel, and they feel well-positioned to capture that.
Exactly. Their substantial investments and strategic positioning are clearly geared towards leveraging those trends. And the proposed dividend also reflects a degree of confidence, I think, in their future financial performance.
Okay, so to wrap up this deep dive then, Sands China is clearly a dominant force in Macau. They've got a clear strategy focused on these huge integrated resorts and targeting the mass market. Their 2024 financial results show a strong recovery underway, and they're planning to return value to shareholders through a significant dividend. However, as you consider their future, it's obviously important to weigh these growth prospects against the inherent risks in the Macau market that we discussed.
That's the key takeaway, absolutely. And it leaves us with a fascinating thought, doesn't it? Given their substantial investments in the Londoner and the evolving dynamics of the Macau gaming market, how might Sands China further differentiate its offerings to maintain its competitive edge and maximize shareholder value in the coming years?
Hmm.
What role will non-gaming revenues like retail and entertainment play in this ongoing evolution? It's definitely something interesting to consider. We encourage everyone listening to explore the full annual report if you want an even more in-depth look at their business and financials.
Great point. Thanks for joining us on the deep dive.